What's up, trader? So second analysis of the week is AUD CAD, the pair that I prefer among all the pair. So let's not waste more time and get down into the analysis. Alright, so to start the analysis, we start off the monthly time frame. So as you can see on the monthly time frame, the trend is currently bearish, and we have a bearish structure as well. So lower lows and lower highs in formation. As you can see, we are currently retracing of the bearish trend. So we are currently sitting on the 50% of Fibonacci, which is a resistance zone as well, base of the blue zone. So you can see when the price reaches on here, it got rejected, and then we broke it, and now we are retesting it back as a resistance. What you can see as well is that the current candle is making an engulfing pattern, but the candle isn't closed yet. It closed in 11 days, so we cannot assume that it will close like that. So we can't take this candle pattern into consideration yet. We will have to wait for the candle to close. So it's pretty much all for the monthly time frame. So now let's get into the weekly time frame. So now that we are on the weekly time frame, as you can see, we are on a bearish trend and we are making a bearish structure. So bearish trend, and we are making lower lows and lower highs. So now we are retracing from the bearish trend. So we are sitting on the 78% of Fibonacci, which is a support zone in the past that we broke, tested at a resistance twice, and now we are testing it for the third time. This zone is also a confluence with the trend line. We start from those two pushes. So as you can see, we have our first push, second, third, fourth, fifth, and now we are on the sixth push. So big confluence on this zone. And if you take a look closely to the candle, the last close of the last week, just let me do that. You can see that there's a big wick to the upside, which represent buyer exhaustion. So this adds a lot of confluence to our idea of shorting the market because of the bearish trend. So now for the target base of the weekly time frame, our first target will be the blue zone here, which is a support zone on the monthly time frame, and it is a monthly resistance support. Our second target will be the weekly resistance support zone here, which is the low as well. And then our third target will be the 0% Fibonacci, which is a confluence with the trend line of those pushes here. So it will be like the fourth touch. So three target, first, second, third target. So this is for the weekly time frame. Now we will go to the daily time frame. Alright, so now we are on the daily time frame, and as you can see, the trend is currently bullish and we are making bullish structure. So we are making higher highs and higher lows. As you can see as well, we are currently sitting on the resistance zone. So before it was a support zone that we broke, tested as a resistance 3 times, and now we are testing it for the 4th time. After that, we have our harmonic pattern with the 0.5%, the 382, and then the 886%. So harmonic pattern that add confluence, and the last one is the 200 MAs. So 3 confluence on this zone here, base of support and resistance. Now we'll go check the candle pattern. So let me just zoom in. You can see that there is a lot of candle accumulation around this zone here because we are on confluence zone on the daily time frame, but even more on the weekly time frame. So we have confluence of the on the weekly time frame. So since the weekly time frame we are just retracing, it's normal that the time frame under that will make a lot of the market will slow down like we are currently making now. So market is currently slowing down because of that. And if we take a look at the last candle at close on Friday, you can see that there's a wick to the upside here that represents a lot of buyer exhaustion. So even more confluence to our sell idea. Does it necessarily mean that we'll go down? No, we are only trading with the odds. So we only like checking the more the setup that have more probability to happen than the other one. So here there is more probability that the market will go down than it will go up. But going up is still a probability. It may happen. even if there's more chance that will go down. So that's why you need to apply risk management to your trading plan. So now that we are on the day time frame and you see that the trend is currently bullish, even if the weekly time frame our first target is the blue zone under that, the first target of the day time frame will be the 50% of Fibonacci. So our first target is the 38, but since there's no confluence, we take this 50% of Fibonacci as our first target with the red zone. So all the confluence here. So our first target will be the red zone. So if here you see that there's maybe a reversal pattern and there's some chance that will go up or something like that, you can take partial profit or even all your profit if you want to. So this is it for the daily time frame. Now we will go to the 4-hour time frame for an entry. Alright, so now we are on the 4-hour time frame. So as you can see, still a bullish trend, but we didn't made a new higher high here. So we only made a high. So for our entry, what we can wait for is a break of the structure here, and then take so if we break like that and we retrace, you can take your entry here with your stop loss above the zone all the way up, with your first take profit here and the second one there and the third one and fourth one, as we said on the weekly and the day time frame. So it's pretty much only that. You can see that if we break, we made a triple top. So if we break that, we made like triple top, but it doesn't matter the kind of pattern that we made. We only trade like the break of structure, so BOS. When you hear me talk about BOS, I mean break of structure, and this is a structure. So break of structure here, it is the safest way you can take this trade with your first take profit here. So it may happen that we go here and we bounce back and down. After that, like we break it. So wait for a full candle to close under, so a full healthy candle for the break, and then you can place your buy limit on the purple zone with your stop loss above. So this is for the safest entry possible for the move. So now we will go to the 1-hour time frame, and you can see for a more aggressive entry. So yeah. So 1 hour, as you can see, we have more structure than in the 4-hour time frame. As you can see, we are in the bullish trend, but we are making a bearish structure. So we are making lower lows and lower high. So bearish structure inside a bullish trend. Really simple to break. In fact, we only wait for a break of structure. So this one here, if we close with a healthy candle, you can take your entry here with your stop loss above the zone. But know that this entry is more risky than the 4-hour break of the purple zone under the price. So here, because it may happen that we do something like that. So break, retest, and then we make a new high for the 4-hour, as I said in the 4-hour time frame, and after that we break. So more aggressive entry, but better risk reward. So overall, if we break on the 4-hour here, and we continue, your risk reward will be way higher, and you will get more pips than if you wait for the 4-hour. So it all comes down to your risk tolerance. If you want to trade a more aggressive trade, or if you want to wait for a safest and the safest way you can take the trade, but like I said, the risk reward is less interesting, but it's still good. So this is pretty much all for AUD CAD for my breakdown. Now we'll take a look to my entry that I took this week on the chart. Alright, so for my first entry that I took last week on AUD CAD was a simple sell limit on the 78.6% of Fibonacci with my stop loss above the wick. So first target is the blue zone, second target is the weekly resistance support, and last target is the 0% of Fibonacci. So long-term trade, since I'm a swing trader, I don't care about holding a trade for a long term. Risk reward is pretty interesting with a 5.09, and it's pretty safe. It's a pretty safe trade. So I don't care what will happen in the lower time frame. So daily 4-hour, I will hold this trade. And if we break with a LT candle on the week time frame. I may lose it before my stop loss, but yeah, it's pretty much for my entry on the week time frame. Now we'll go my second entry that I took on AUD CAD. So second entry that I took on AUD CAD was at the break of the higher low here. So higher high, higher low, higher high, break it, sell limit on this zone that we hit, and I had no other choice than placing my stop loss all above this zone here because we made no structure because the market was really volatile at this time. So my stop loss was something like 86 pips, so 85 pips, and then my target was like the blue zone here, or even like the red zone, so the sort of 2. But what we made after that, we made a double bottom formation, and as you can see here, the candle, we had a lot of seller exhaustion. So I went onto the 15-minute to see if there was another structure, and as you can see, there was a structure. So let me just delete that. So I moved my stop loss all the way above the structure on the 15 minutes. So we broke the double bottom and I lost for 12, so let's say 13 pips. So if we take, if we calculate, like I'll have 3% over 85 pips. So if we calculate how much I lose on this trade, I have to make 12 times 3 divided by 85, I think. So I lost at 0.4% instead of my whole 3% risk. So pretty good risk management on this trade that I made. So I didn't lose much. Only like lose, what is that? It's like 1/6 of a trade. So yeah, good risk management. So I have my long-term sell still running, and I lost my more aggressive one. So this one was an aggressive trade because the 4-hour was still bullish. So we only made a higher low here. So that's why I managed it on a smaller time frame. So that's pretty much it for AUD CAD. So we'll see again next week. I will talk about the trade that I take this week. So if we break that, I'll talk about that next week. So see you next week all, and have a good week of pips.